Hi there. Are you or someone that you know going through a divorce? Well, you're going to want to check out this video where I'm here with Marc Crossman of Alberta Mortgages, and we're going to interview and get through to the bottom line of how this might look in your pocketbook if you own a home. So you're going to want to check out this video where we have some hard-hitting questions about the bottom line if you are encountering a divorce. And surprisingly enough, about 40% of all of Canadians go through this process. And I personally know 4 people right now that are going through this. So I've got a lot of questions, and so we're going to try and answer them. And if you do have any questions, please feel free to reach out to us. I'm going to have our information in the comment. And also, I would love to be able to help you if you are going through this process and you're in the Edmonton, Alberta area. So number one is I'm going through a divorce, Marc. What would you say is the top thing that you might be able to help me with? I'm going through a divorce. I own my home. I want to keep the family home. What sort of financing options do you have for me?
Well, first, what I'd want to do is have a conversation about the timelines, because a lot of clients aren't aware of what is required in order for you to keep the home. The first thing is we need a separation agreement or a divorce agreement. Now, the separation agreement, you don't necessarily have to go through a lawyer. A divorce obviously do. So you need to start that process early and budget some time for that. If you're going through a divorce, it might not be amicable, and so it might take some time. So separation agreement, as long as there's a few things in that separation agreement, it doesn't have to go through a lawyer. That would be the biggest thing. We won't be able to, the lenders won't provide financing if we don't have either a separation agreement or divorce agreement. So that's the first thing. We saw an uptick in divorces after COVID, and the other problem that we're seeing is that if clients do go through a lawyer, finding a lawyer to take the case and do it in a timely manner is another major issue. So that's just time-wise, a couple things to think about. In regards to the actual fact of getting the financing in place, there are programs, spousal buyout programs available for someone going through a divorce. So we can go up to 95% of the appraised value when you're purchasing a home, and that down payment can come from the equity of the home, and you don't have to come with or save the 5% again when you did that originally when you purchased a home. So that would be the biggest things, that we can refinance up to 95%. Typically a refinance is up to 80%. So we can go up to 95%, and we can use that equity for your down payment, paying out the spouse, and any joint debts.
So my question to you would be, is this a Canada-wide thing, and what is the mortgage rates that you're looking at? Are they a higher rate because you are like an equity home line of credit thing? Like if I have never really dealt with finances before and I just qualified for a mortgage and then suddenly, oops, I have no idea what I'm doing. How does this work percentage-wise?
So a couple questions in there. First, it is Canada-wide. So this is going to be a lender program. The spousal buyout is a lender program, so it's going to be nationwide. So it doesn't matter where you are in the country. The second question, rate-wise, it's not going to have effect on your rate. Basically, you're going to qualify as if you're a first-time home buyer or a standard buyer. So there's no premium on the rate. And the third question,
is there any fees associated with this?
No, it's standard mortgage, so no costs if you're going through the process. One thing you did mention, and I drew a blank there for a moment, but typically when we're dealing with couples, when we're going through the financing process, there's one that's taking the lead. And unfortunately, generally, that's the male, and sometimes the females aren't taking the lead, and sometimes when they're going through a divorce and the one partner is stronger on the finance side versus the other, we just have to take our time and educate that spouse that wasn't the strong person, but maybe the person that is staying with the kids or staying with the home, to educate them around the process and what's involved. And so it's almost we're doing double duty, educating them on the mortgage process just to understand that, and then educating them on the divorce process, which is the layer that's on top of the mortgage.
Well, crazy enough, especially right now, Edmonton and Calgary are taking a real heat on the market because of low inventory and high demand. Are you finding, and this is another question I have, if there is a separation, Is the home at the time, if you're trying to, pay out this house or whatever, is it at the time of the separation or is it at the time of divorce? Because like you mentioned, sometimes it's 2 years before they can get in front of a judge. And the property may have went very high in the meanwhile. So is that affecting people's qualifications?
Well, yeah, the market is definitely going to have an effect on the qualification, because the 95%, especially if one spouse, the spouse that's staying, is qualifying on the marketable value of the home. So when we do the approval, the home is worth $400,000, and depending on the market, has the market gone down or gone up? And if it's taking 2 years, the market value might change. So we might have some control of if the market value is great now and we've proved, well, we have the appraisal. The appraisals usually will be good within a lender for about 6 months. Beyond that, then we might have to do a new appraisal. So the market space,
so the amount that you have to pay out to the spouse could really change dramatically.
Yeah.
In a home or properties like Whistler or something where it's in high demand. Now, in terms of second homes or typically how many times do you do this program? Do you find that a lot of people end up having to sell either way because the amount that they're having to pay once they've separated is just too much? And how do you avoid that? You know what I mean? Like, is the mortgage, because there was 2 people paying and then suddenly they're paying out 50%, and so they're maybe having to mortgage through $250,000, where like the payments become crazy. Like, what do you find?
So
what's your percentage usually?
The spousal buyout program is going to be for owner occupied and won't be for second or vacation properties or anything. So that's a separate issue.
Okay, so now I find, because I come in a little bit later because I'm a real estate agent, it seems to me that a lot of these homes, when there is a divorce, end up having to go on the market. Do you find that?
Yes, for a couple of reasons. One, there's usually one spouse that has a significantly higher income than the other spouse. The other issue is that there's accumulation of debt. And one other third issue that we find is because there's a spousal breakdown, the parties may not be talking or in a space of being able to manage the existing debt. And there's at times where spouses are getting back at each other, not paying bills on time. And then
I've had a lot of clients, because I've been doing this for 17 years, where their credit is just destroyed after divorce, and it's because one spouse didn't protect themselves and they went rampant, doing it on purpose, not paying bills and just wrecking their debt, which takes quite a lot of years to. So in that regards, is there programs, if my debt has been, or my credit has been killed because of a divorce, is there programs? I think that you have some rent to own programs that could work. If I've got, I've just went through a separation, I have a huge amount of cash, but my credit has been destroyed to below 600, and I have to build it up over the next 2 years by paying my bills because the spouse wrecked it. Is there programs that you have as well that you could maybe get me into a house?
Yeah, so depending on the equity that's available, even though we can go up to 95%, if credit's an issue, if it's 95%, then it's an insured mortgage. So basically the lender has to approve it, and then an insurer has to approve it, and that 95% loan to value. But if there's a ton of equity, the client has a lot of cash that they can put into the deal, we have 2 options. One, we can refinance up to 80%, which means that it doesn't have to be insured, and then it's just the lender needs to be comfortable with the deal. And some lenders, we have all our A lenders, but we also have B lenders that will look at clients that have less than perfect credit, and we do a 1 or 2 year deal, get the credit fixed, and then move the client back to the A side. So normally that's of course. So the other option that we have is a rent to own. That program is very specific in the sense that you have to have a fair amount down, usually 10%, and then we have an investor that will come purchase the home from the client. We'll have the client on title, and then in 1 or 2 years, the client will qualify for that home on their own, and then we'll move them back to the A side as well. So a couple of different options, but usually the conventional 80% loan to value is the main way to get around the credit issues.
Okay, so I guess one last question that I have is if I am going through this divorce and I feel like everything is daunting, do you have any type of tip sheets or anything like that that you have for people that are going through a divorce? Like, how do I even navigate the start of this financing and selling my home? And like, what is our really quick 5 steps that you would see if I'm going through a divorce? What's the first things I need to accomplish? An appraisal. It sounds like an appraisal is really important. And probably an appraisal, I would say, maybe a realtor appraisal, a realtor coming in. I would say probably for a divorce, you need at least 2 realtors' opinions. Obviously, you need to get a lawyer involved, and it needs to be a divorce lawyer, and possibly a real estate lawyer as well if you are going to be buying out the partnership. And I guess step 4 would be getting your credit checked. I mean, what do you see as the 5 quick steps?
So the first thing I'd say is that someone going through a divorce, purchasing a property, they're doing a mortgage. Now, the divorce is an aspect on top of that, but I would take them through the normal, getting them pre-approved and have that conversation. So we do have some resources. We have a home buyer's guide, which will be from start to finish what the process is to get you financing. And that is 90% of the process. There's a little bit around the divorce that we have to manage for, and some of them you mentioned. So I would contact yourself, another realtor, do a CMA, and get an
CMA is a home evaluation.
Sorry, an assessment of the value and what numbers you can start working with. Are we looking at 80%? Are we looking 95%? But you need some context of how much value or equity that you might have. So that would be step 2. Step 3 would to start that separation and divorce agreement process, whether you're doing it through the courts, through the lawyers, or you guys are amicable and you can do it on your own. And separation is going to be cheaper, faster to proceed. And we give you some advice around what we need to see in that separation agreement. So that would be a critical step. And then once we have those things in place, then we look at a pre-approval. The pre-approval is going to look at your income, your down payment, your credit, and what's that spousal, child support, Canadian tax benefit, all the different income sources. And then we determine, based on what those numbers, can we qualify for the price range or the value of the home that you currently own with your spouse or your soon-to-be spouse. So I think those might be the 3 or 4 steps that we go through to get someone set up and ready to go after the divorce.
So I think that the general consensus after this small little interview is that it can be very overwhelming. There are professionals like Marc and myself that can help you navigate through this process. It can be challenging times. There is a lot of emotions involved, and that's why you want to work with professionals. And don't assume things. Don't assume that you have to move out, that you have no choice but to move out. There are a ton of options. However, don't just go to your water cooler and hear what the water cooler guy is saying because he might have had a terrible divorce or she might have had a very bad experience or their friend had. Why don't you just go with the facts, even though it's very emotionally charged, and go step by step through the process, and we can help you. So thanks for joining us. I will have a link to my 7-tip sheet on buying a home, and will have Marc's information in the comments below. And please check out more of our videos where we're going to be going through home buying process as well as home selling process and what the interest rates are going to be doing as a forecast in Canada. So from Marc Crossman here at Alberta Mortgage Advisors and Karen Stanko with REMAX Real Estate, thanks for joining us, and we'll see you at the next one.